Hello everyone again, just move that out the way. I've remembered to switch the audio on this time, so hopefully you can hear me loud and clear. Excellent, Anna can hear me, so I'm sure you can too. We're just staying with the Aussie Yen. I've got Aussie Yen up all over the place. I've got it over on TradingView here. I'll pull that across in a moment. But I've got it on multiple time frames. I've got it on 15-second, which is a time frame I use a lot for intraday. 3-minute, 4-minute across the top here. In fact, let's change that up to 5-minute. I'll just change that over there. There we go. Down at the bottom line, we've got 10-minute, 30-minute, and over on to the daily. And as always, what are we expecting? It's 8:01 UK time. So the UK market is opening, the forex market's opening after a 3-day holiday. What we're looking for is reversals, pullbacks, volatility for the next sort of 5-10 minutes. Let the market settle down. You can start to see it here on 15-second. Rolling over, lots of volatility, two-way price action, 2-bar reversal there. Volume will pick up as you expect as we get into the London Open, and then we can start to compare volume across the London session rather than with the European session. Let me pull this over for a moment across the screen. There we go. This is TradingView. I've got the Aussie Yen here as well. This is on 15-minute. I just wanted to highlight this because there are some nice VPA lessons in here. The trend is certainly on this time frame is very bullish at the moment. So from a slightly slower term perspective, that sentiment is pretty strong. You can see it on the trend monitor. We have this transitional phase here. The trend monitor went into the darker phase of color, but it didn't actually go into red. So in other words, it was just holding us in there through the trend, coming out the other side, back into the bullish blue and maintaining the trend. In terms of VPA, the interesting section of price action here is we get this is overnight, our time, this is 3 o'clock, this is 6 o'clock. We get this rally, we get a lot of volatility, we get a ton of volume coming in. Then we get some weakness signal with this candle here. But what's interesting is, as you can see, we've got falling price here and we've got falling volume in line with it. And what that tells you is that, as Anna said, it's a question always of unpicking on any chart whether a reversal is a full-blown reversal from a primary to a primary, in other words, from a bullish to a bearish, or is it simply a pullback, a minor pullback into a secondary trend or even a tertiary trend using Wyckofffian terminology, which then reverts back into the primary. So here we've got the primary trend higher, we get the reversal into the pullback, and then we get re-establishment of the primary trend. And that is an application of VPA which is so powerful. We focus on it a lot in the trading education program. And the reason for that is very simple. It's because the one aspect of trading which defeats traders universally and is the hardest thing to overcome is this whole business of staying in a trend and maximizing profit. Because if you are constantly making small losses, which we all do, but in addition to that, you're making small profits, then your trading account is either going to be waterlogged or probably going to slide lower gradually. It's not going to move forward. And the only way you can move forward is to offset those small losses with larger profitable trades. And the way to maximize larger profitable trades is holding the trend. And that is easier said than done, because our natural instinct, whenever a trend is underway and we've got some profit in the bank, our natural instinct is to close out and take our money off the table because we have a fear of losing what we have. And that is the most powerful emotion. If you have something, you've mentally banked it, and then you start to see it dwindle away a little bit, and then a little bit more, and then some more goes, your natural emotional reaction is to close out. And that's what damages most traders. It's not about getting in and getting out. The damaging aspect of trading is being able to stay in a trend when those reversals come, and understanding whether it's a primary to primary or whether it's just simply a pullback is key to this whole business of moving your trading account forward. And that's where the trend monitor steps in. But it also, the key aspect of volume price analysis, we talk a lot about, yeah, we've got signals to buy, we've got signals to sell, or we've got trap moves and everything else. but it is that whole principle of understanding from a volume price analysis perspective when we're going from primary to secondary and then coming back into the primary again, or whether we have truly gone from primary to primary. And we, as I say, we explain it in huge detail in the Forex program. Just wanted to show you something else on here. You can see, obviously, we've got some of the indicators here. There has been a big upgrade in TradingView, and we're hoping to get all the other indicators ported across this platform. It's the next job after we've completed on TradeStation. But just to show you something else, in case you're not aware, you can actually trade through TradingView with these brokerage accounts. So if you're on Oanda, if you're on TradeStation, Gemini, and FXCM, you can link these through to your brokerage, through to your TradingView platform. So it's good stuff in there. It's an excellent platform. Really, there's lots of bells and whistles on there. Just slide that out the way. VIX is getting underway, so we'll see what's going on there. Okay, we've got the pause point at the moment. It's what we expect to see all the time. Let's just head on over to the indices, see what sentiment's like there. This is on the US markets. This is Globex. This is the YM, top left. We've got the NQ in the middle, and this is the ES on 5. They're all on 5 minute, and down the bottom here, we've got the daily. Now, clearly, it's, you know, the sun is shining. It's all positive, all happy. But from an intraday perspective, and this always surprises some traders that, yes, these are US markets. The you know, everyone is asleep in America at the moment, or most people are at any rate, and yet we have this clear signal of sentiment from an intraday perspective. We are in the UK, we're trading Forex, and yet we have the US markets up, giving us that view on sentiment. It's pulled back at the moment, but the longer term is pretty bullish. We're trading around the volume point of control here, this yellow dashed line. So we're expecting some congestion to build. So in terms of what is going on in Forex, that's what we're expecting to see, certainly on the fast time frames at any rate. Let's just go back onto that one. There we go. So we're trading around the volume point of control here. It's Aussie yen. And that's the reason why we're starting to see a bit of a pause, just waiting for the VIX to kick into life. I'll pull that over in a moment. But that's what we're seeing at the moment. We're just seeing this pause point coming up. But the sentiment that we're seeing is still very bullish. If I go on to the currency array, I've isolated out the, at least I think I have, yeah, I've isolated out the yens here. So you can see what's going on. The strongest at the moment, ironically, on the faster time frames is the pound yen. It's not the Aussie yen. Up onto the 10 minute, we've got the New Zealand yen, we've got the pound yen here as well. And we've got the Aussie yen up here, and we've also got over on 15, we've got the same picture here. So it's very strong, lots of yen selling. And it's a question of picking out which pair is going to deliver and really spoiled for choice. Let's just head on to the CSIs. Got multiple CSIs here as well. There we go. That one. There we are.
Now just contribute. Don't change it.
Yeah, I'm just going to switch off for a moment.
Just to jump in there where David was saying which pair to look at, and it's just something to be aware of as well. We looked at the CSIs where we could see that there had been some very strong buying in the Aussie yen and the New Zealand yen, but not so much in the pound, and certainly nothing in the euro yen. That hasn't really moved at all, and that's a function of the local forces, the local drivers. You would expect the Aussie and the New Zealand to be stronger because we've just come out of Asia, and in a way, when at the time that you come to your trading will also determine what's likely to move in that local time zone, as it were. So we've just had the London Open. So if you see something like the New Zealand and the Aussie very overextended, and you think, oh well, maybe this is going to carry on through, they possibly going to come to a pause. So the pound yen may be a better option because that hasn't had time to move higher. It's kind of playing a little bit of catch up, and I've actually got the pound yen up at the moment on both MT5 and NinjaTrader. So that could be one way of playing these strong moves that you see in maybe one or two pairs, say of the yen pairs, then you get a rotation, but that is because the there's been a crossover. Obviously, we're now in the UK, so even though the yen may be overextended, there's still enough in there for some buying of the British pound. Sorry, I just thought I'd mention that. It's all right, time. Yeah.
And one of the things that the CSI also tells you loud and clear, not only does it tell you which pairs to consider, those moving higher strongly, currencies moving strongly higher with very steep angle of inclination, or those declining strongly. It also tells you which pairs not to consider. We've got a whole bunch down here at the moment. For example, you've got the yen, the dollar, the euro, and the Swiss franc. They're all moving pretty much in lockstep here. Certainly the same is true here in terms of the yen, dollar, and Swiss franc, and the same over here. Equally up at the top, you could say, well, you know, we've got pretty much the commodity currencies, although the Canadian is starting to sell off quite strongly. It's breaking away from the other two. But certainly up at this point, you were looking at the Aussie, the Canadian, and the New Zealand yen, all again moving in lockstep. So in terms of looking at those as currency pairs for trading, there wouldn't be much going on. They'd be in congestion because they're moving in the same direction. It's the analogy I've used many times before. You've got two trains running on a parallel track in the same direction. There may be slight differential speed between the two trains as they're pulling out of the station. But in terms of momentum, there is no momentum, or very little momentum. The momentum comes from that divergence in terms of strong buying and strong selling. That is what drives a currency pair. So what we're seeing right now, certainly in terms of the yen complex, the Canadian and the yen here are now moving in pretty much the same direction. So, you know, that's not going to be one to consider. But if you were looking at the CAD against another pair, then you might consider it against the pound, for example, or you might consider it against the Aussie, because you've got divergence. You've got the CAD falling and you've got these two currencies rising, and the pound is still continuing to rise. So we've got strong buying there. And that's why on indicators like the array, for example, just head back onto the array, that is why you see this divergence in strength. You know, where is the strength coming from? Is it in the Swiss yen? No, and the reason it's not in the Swiss yen is because at the moment that may well change, but for it to change, buying or selling strongly has to appear in one side or the other, and at the moment they are moving in the same direction. The same is true of the dollar yen. That's why they're languishing down at the bottom here. It doesn't mean that sentiment isn't universal. It just means that the strongest pair at the moment certainly is the pound yen. You can see it up here rising very strongly. And if I go over onto the currency indices themselves, here we go. Over onto these are the currency indices which you have on MT4, MT5, and also on NinjaTrader. We've got the yen here at the top left, we've got the dollar here, we've got the euro here, and we've got the pound bottom right. This is all on 5 minute. And what that is reflecting is clearly the strong buying in the pound at the moment, got decent selling in the dollar, decent selling in the yen. So either of those will be showing a strong trend. We've also got this pickup again in selling of the yen. You can see it here. We had a little bit of a rally. It's now starting to sell off again. Got strong selling in the dollar. So really spoiled for choice at the moment in terms of the pairs you want to pick off. And then it's a question of looking at the charts. What is VPA telling you? What is happening on the matrix? What is happening in terms of sentiment? You're back onto sentiment again. You know, see what's going on there, and so on and so forth. And round you go again, back onto the currency strength indicators, and back onto the charts. So if I pull up the pound yen, let's just change that over. There we go. That's the move that's developing again on the Aussie yen. As I said, the bullish trend is still in play. And you know, just to go back to the point I was making earlier in terms of the TradingView, this is on 30 minutes, so a different time frame, but a very similar sort of picture where you've got a doji candle, you've got indecision, that's fine. So you're expecting some sort of pullback, some sort of pause point, some sort of congestion phase to build. The volume falls away, so we've got a decent downspread candle, but the volume is falling away. And then we start to see support coming in. These wicks to the lower body, we've got decent volume under that candle. There is buying coming in. It's supporting the price action. We've got more buying coming in, supporting the price action. Trend monitor hasn't transitioned, hasn't flickered, hasn't changed color, hasn't even gone to a darker a darker blue as suggestive of a potential change. And now we're moving up the chain again and on up the chart. And that's the issue. It is this whole business of staying in, holding a position in a trend once it's underway and maximizing. This could be a 1 minute chart, it could be a 15-second chart, it could be a daily chart, it doesn't matter. Whatever your chosen time frame, VPA applies. We've got rising volume here, which is nice. We're coming into, this is 6 o'clock our time, this is 8 o'clock our time. So this is through Europe. This is Europe opening up here, decent volume, nice candles, no great wicks under there. A little bit more buying, a little bit of indecision there as London gets ahead of London. I've got the volume switched off. I can switch that on actually. So just pop that on there. I have it switched off on a lot of charts because I have so much data coming in here. Let's put it on tick. There we go. Click that on. Okay, now we're starting to see the volume coming in. It's quarter way past, it's halfway past this candle. In other words, we've done 16 minutes of the 30-minute candle. So we've got decent volume coming in under here. And if this candle closes up a nice wide spread with good volume, you know, the trend is going to continue and on up we go. What's also interesting from a volume, a VPOC perspective, the histogram, in other words, we're moving up into low volume regions here. Sorry, let's pop that back up full size. There we are. We're moving up into low volume. So what's happening here in terms of the VPOC, we are getting ever further away from the volume point of control, which is sitting down here. This is a movable feast, by the way. This doesn't stay static. We had this congestion phase building. It was sitting around the volume point of control. That was the biggest area, concentration of volume. We had these very strong areas of support and resistance in play. So we had a channel of price action. We had volume falling away. We had narrowing spreads, which is all what we want to see. And then, boom, we get into the market and the volume kicks in. This is overnight Australia daytime, nighttime us. And we're moving higher. But as we move higher, you can see the volume here is falling away. So from a trading perspective, this is great news. There's no particular price resistance ahead, so we're looking for this to go higher. The volume doesn't have to be huge to bust through this region because there's very little in the way of volume to act as resistance to the market moving higher. Volume can be viewed in exactly the same way on this chart as price. You have price-based resistance, you have volume-based resistance. When the market gets into these heavier regions, it's going to pause, it's going to congest. So from a trading perspective, we want to see low volume nodes like we've got here. We've got a fall away in volume. We expect the market to move through there pretty rapidly. You know, there's nothing in it that is like to cause it a problem, in other words. This is on 10 minutes, similar sort of picture. We're starting to move higher. Nice bit of support coming in there, wick to the lower body, decent volume under there, that's good. Trend monitor's bright blue, which is what you expect to see. And on up we go. We've got light volume ahead, so you know that's all nice and dandy. But just pull over the trading view again on the VIX. Let's have a quick shifty at the VIX, see what's going on here. This is on the downward slide as well. Trend monitor's red. This is on 1 minute. This is on 3. This is on 5. Just getting underway. This is on the daily. It's a bit sluggish on the daily, but that's what we want to see. We want to see it moving lower. Trend monitor's red, to say we're ticking down, minus 0.3 so far on the day. Move that out the way again. Just head back onto the indices to see where they're going. Okay, we're in a bit of congestion. They're not really following through at the moment. If we're trading Aussie yen long, we want to see you know, break away from these regions, good volume, support, and a move away from the volume point of control.